In exploring the concept of rare and exotic patterns, we come to understand the significance and uniqueness these patterns bring to various fields, particularly in design and nature. Rare and exotic patterns are those that stand out due to their uncommon occurrence or unique visual appeal. They can emerge anywhere from the intricate designs seen in wildlife, such as the distinct coloring of a rare animal species, to the complex patterns found in textiles, which are often the result of highly skilled craftsmanship or technological innovation. The conclusion, which focuses on embracing the enigma of rare and exotic patterns, highlights the importance of appreciating these uncommon forms for both their aesthetic beauty and their ability to inspire innovation. By valuing rare and exotic patterns, we can learn to look beyond the ordinary and challenge ourselves to think creatively. This mindset not only enriches our appreciation for diversity and complexity, but also encourages us to explore new possibilities in our own work, whether it be in design, art, or any endeavor that benefits from a fresh perspective. Understanding and appreciating rare and exotic patterns requires an open mind and a keen eye for detail. It involves recognizing the uniqueness of these patterns and the ways in which they can enhance our aesthetic experiences and creative endeavors. By embracing the enigma of rare and exotic patterns, we open ourselves to a world of beauty and innovation that can enrich our lives in countless ways. The Black Marubozu is recognized as a bearish continuation pattern found in the study of candlestick charts, pinpointing potential for continued downward trends in the price of a security or stock. Envision this as a dark silhouette on the chart, devoid of wicks at either end, signaling a day where the opening price was the highest point and the closing price fell to the very bottom, with no upward retracement throughout the trading session. This lack of shadows or wicks suggests strong bearish sentiment among traders, as sellers dominated the trading session from start to finish, pushing prices lower without any significant upward correction. It often appears during a downtrend, signaling that selling pressure remains robust and the current trend is likely to persist. Understanding the Black Marubozu's implications helps traders and investors to make informed decisions about potential future price movements. By identifying such patterns early, one may consider this an opportune moment to evaluate one's position in the market, whether it means securing profits from short positions or reconsidering long positions in light of potential further declines. Identifying a Black Marubozu candlestick is crucial for investors seeking insight into market sentiment. This candlestick pattern is recognized by its long black body, which indicates a strong selling pressure throughout the trading session. It is characterized by the opening price being the highest of the session and the closing price being the lowest. There are no upper or lower shadows, which means the prices did not deviate from the range set by the opening and closing prices. This pattern signals bearish continuation when it appears in a downtrend. It suggests that sellers are aggressively offloading their positions, pushing prices further down with no sign of price recovery or buying interest during the trading period. Traders and investors analyze these patterns within the context of other market indicators and trends to make more informed decisions regarding their investment approaches. The absence of shadows in a Black Marubozu confirms the bearish sentiment, hinting at continued downward momentum. Understanding this pattern can help in anticipating market movements and potentially alert investors to prepare for a sustained bearish phase. It is essential for those analyzing market trends to be familiar with such patterns, as they offer insights into the emotional state of the market and the balance between buying and selling pressure. The Black Marubozu is a type of candlestick in technical analysis that signals a bearish continuation pattern. It is characterized by a long black body, indicating that the opening price was the highest and the closing price was the lowest for the given time period. This suggests strong selling pressure throughout the period without any retracement. It is called a continuation pattern because it implies that the existing downtrend is likely to continue. Deciphering market sentiment with this pattern involves recognizing the strong bearish sentiment among traders. The absence of wicks at either end of the candlestick indicates that sellers were in control from the opening to the closing of the trading session. This can be a sign for traders and investors that the market sentiment is negative and the prices may continue to fall. Incorporated into an analysis, this signal can guide investors in making decisions about entering or exiting positions. Seeing a Black Marubozu during a downtrend can warn of further declines, prompting considerations for selling or short selling as part of an investment strategy. It is crucial, however, to consider this pattern in conjunction with other indicators and market factors to make informed investment decisions. The Black Marubozu is a specific pattern that appears on trading charts, widely recognized for its strong bearish implications. This pattern consists of a long, solid black candlestick without shadows or wicks, meaning the opening price was also the highest price for the period and the closing price was the lowest. This indicates dominant selling pressure throughout the trading session, where sellers controlled the market from the opening to the closing bell without giving any ground to buyers. The nature of the Black Marubozu pattern serves as a beacon of bearish continuation. It often appears in the midst of a downtrend, reinforcing the current bearish sentiment among traders and investors. When it is observed, it suggests that bears are firmly in control, and there is strong momentum that is likely to continue pushing prices lower. This makes the Black Marubozu a valuable signal for traders looking to capitalize on the continuation of downward trends. Understanding this pattern requires grasping the basic principles of candlestick charts, where each candle visually represents the price action of a security within a specific time frame. The absence of wicks in a Black Marubozu tells us that the trading session ended at its lowest point, which is a clear sign of bearish dominance. For traders and analysts, recognizing such patterns can be crucial in forecasting future market movements and making informed trading decisions. To understand the concept of a Black Marubozu, it is essential to dive into the basics of candlestick patterns used in financial markets for price analysis. A Black Marubozu is a bearish candlestick pattern recognized by its long black body, indicating a significant sell-off where the opening price is the highest point and the closing price is the lowest. This pattern suggests strong negative sentiment among traders. When it comes to confirming the signal, identifying a singular Black Marubozu is not enough to predict future market movements with certainty. Confirmation is critical to ascertain the continuation of a bearish trend. There are several methods to confirm this signal. One method is to look for a continued decline in prices the following day or over the next few sessions, which reinforces the bearish outlook suggested by the Black Marubozu. Alternatively, traders often look for supporting signals from other technical indicators, such as moving averages or relative strength index (RSI), to confirm the bearish momentum. Volume analysis can also provide confirmation. An increase in trading volume on the day the Black Marubozu appears and subsequent days can signify strong seller participation, supporting the continuation of the downtrend. In summary, the Black Marubozu is a potent bearish signal within the context of candlestick charting. However, traders seek further confirmation through additional price action, technical indicators, and volume analysis to make more informed decisions regarding their investment strategies. The reliability of the signal generated by the Black Marubozu pattern, a bearish continuation pattern, is considered significant in the context of technical analysis. This pattern is identified by a long, black candlestick without shadows on either end, indicating that the market opened at its high and closed at its low for the period. This strong bearish signal suggests that sellers maintained control over the price throughout the entire trading period, often leading traders to anticipate a continuation of the current downtrend. However, it is crucial to consider the pattern within the broader market context for a more accurate assessment of its reliability. Factors such as volume, preceding price actions, and market conditions play a critical role in confirming the signal's strength. For instance, a Black Marubozu occurring with high trading volume and after a significant uptrend may indicate a stronger, more reliable signal for a potential reversal or continuation of the downtrend. Conversely, if this pattern appears under low trading volume or in a sideways market, its reliability as a signal for further bearish movement may be diminished. Investors and traders leverage this pattern, among other technical analysis tools, to refine their market entry and exit strategies. By assessing the Black Marubozu within a comprehensive analytical framework, market participants can enhance their decision-making process, improving the potential for successful investment outcomes. However, it is also advised to consider other analytical tools and economic indicators to form a well-rounded market perspective, given that reliance on a single pattern or signal carries inherent risks due to the dynamic and multifaceted nature of financial markets. The Black Marubozu is a candlestick pattern that signals a strong bearish movement in the market, suggesting that the price of an asset is likely to continue falling. It is characterized by a long black body with no shadows or very short ones, indicating that the opening price was the highest and the closing price was the lowest for that time period. This pattern is a clear sign of seller dominance during the trading session. In synergy with other technical analysis tools, the Black Marubozu can provide even more valuable insights. For example, when combined with trend lines or moving averages, it can help confirm the strength of an existing downtrend. If the pattern appears near a resistance level, it can signal that the asset is unlikely to break through that level, reinforcing the bearish outlook. Moreover, oscillators like the Relative Strength Index or RSI, which measure the speed and change of price movements, can be used in conjunction with the Black Marubozu. If the RSI is showing overbought conditions and a Black Marubozu forms, this could indicate a potential reversal or a start of a downward trend. In essence, the Black Marubozu, when used alongside various technical analysis tools, can provide a comprehensive view of the market. It can help investors to better gauge market sentiment, confirm trend directions, and make more informed decisions regarding their trading strategies. Navigating the pitfalls associated with a Black Marubozu pattern, a bearish continuation indication in the stock market, requires a keen understanding of its characteristics and implications. Firstly, it is essential to verify that the pattern is genuine by confirming that the trading session starts at its high and closes at its low with a significantly large range. This lack of shadows signifies strong selling pressure throughout the session. Secondly, one must be cautious not to act hastily on a single pattern alone. It is crucial to seek additional confirmation from subsequent trading sessions or other technical indicators. For example, a follow-through day with continued selling could affirm the bearish outlook, whereas a rebound might suggest a possible recovery or a false signal. Finally, it is vital to consider market context. A Black Marubozu occurring in a downtrend could reinforce the bearish sentiment, but if it appears in an uptrend or at potential support levels, it could signal a more significant reversal. Understanding the broader market trends and incorporating other analysis tools enhances the decision-making process and helps to navigate the challenges presented by this pattern effectively. The Black Marubozu is recognized as a bearish continuation pattern within the field of technical analysis, a branch of finance that evaluates investments and identifies trading opportunities by analyzing statistical trends gathered from trading activity, such as price movement and volume. In its essence, the Black Marubozu candlestick is characterized by a long black body, indicating that the opening price was also the high of the day, and the closing price was the low. This pattern does not have shadows extending from the body, signaling that sellers controlled the trading session from the opening to the closing bell without any retracement. In strategic applications, the presence of a Black Marubozu can be an important signal for traders and investors alike, indicating strong bearish sentiment and potential continuation of a downtrend. As such, this pattern is often used to inform decision-making on short selling or exiting long positions to minimize losses. Traders might look for this pattern in conjunction with other indicators to confirm the bearish momentum and to identify potential entry points for short positions. Additionally, in markets where reversals are common, a careful analysis of subsequent patterns is essential to avoid false signals. The strategic implication here is the emphasis on market timing and risk management, aiming to interpret market signals accurately to make informed trading decisions. Understanding and utilizing the Black Marubozu pattern requires a keen eye on market trends, volume, and price action. It is a tool among many in the arsenal of technical analysts, emphasizing the importance of context and the confluence of signals in predicting market moves. Engaging with this pattern effectively not only enhances a trader's ability to read market conditions, but also underscores the importance of disciplined trading strategies to navigate the complexities of financial markets. The Black Marubozu is a significant pattern in the study of candlestick charts, often indicating a strong bearish sentiment when it appears during a downtrend. This pattern is characterized by a long, black body with little to no shadows extending from the top or bottom, signaling that the sellers controlled the price action from the opening bell to the close. In exploring variations of the Black Marubozu, there are a few notable forms that could appear, each providing insights into market dynamics. One variation is when the Black Marubozu has a tiny shadow at one end, suggesting a slight hesitation among sellers. Although the overall sentiment remains bearish, this minor shadow can indicate that buyers attempted to push back, albeit with limited success. Another variation might see the Black Marubozu within a broader price range, where the candle's body is just as dark and long, but with more significant price volatility throughout the trading session evidenced by shadows. This variation might indicate a more tumultuous trading session where sellers eventually gained the upper hand. Importantly, whether in its pure form or through its variations, the Black Marubozu is a tool for traders to gauge the strength of current market trends. It provides clues about market psychology, showing periods when bearish sentiment is overwhelming. Understanding these patterns and their variations can help traders make more informed decisions, combining this knowledge with other technical analysis tools for a well-rounded strategy. In summary, the Black Marubozu and its variations offer a visually intuitive way to capture the essence of market movements, highlighting moments of strong selling pressure.